Hi there, hope you're doing just fine. Okay, so in previous video, we were talking about flat correction, right? There are a couple of, most commonly three different types of flat corrections that happens or occurs in wave 4 and sometime in wave 2 as well. No, mostly in wave 4. Just like this one, you have wave 1, 2, 3, and this is wave 4. So flat correction is around like 38%, and it says, sideways correction, ranging conditions, A equal B equal C almost. Sometimes one of these like B is bigger than A or C is bigger than A, something like that, right? So these are the variations that we were talking about. So in the previous video, we talk about a flat correction, which another version for this one is like this one, right? So it's A, B, and C with subwaves, 1, 2, 3, 1, 2, 3. I mean, A, B, C, 3 waves, A, B, C, 3 waves, and then wave C have 5 waves, right? Sometimes it turns around to be like 5, 3, 5, 5 waves in A, then 3 waves in B, and 5 waves in C. Just the opposite of this is a bearish flat correction, right? With the big move, impulse move, 5 waves move to the downside, and then the correction happens, right? A, B, and C with wave 4, around 38%. Sometimes it goes to 50% as well. And another rule of thumb is that usually this wave 4 goes into the territory of the last wave 4, which is this one here. So when something like this, the wave C ends up equal to, or more or less of the last wave 4 of wave 3, then you know that it is what it is, right? So it's a flat correction. Now the other one is a expanded flat correction, the second one, right? So expanded flat correction has a little bit of variation from the regular flat correction, I should call regular flat correction. And this is expanded flat corrections. Why the name suggesting is that it is expanding, right? So wave 3 ends here, and then you have wave A, B, C, A, then A, B, C, wave B. Unlike flat correction that B is supposed to stay below wave 3, in this expanded flat, B is supposed to go above wave 3. That's the only variation in this and the regular flat. The B will end up going above wave 3, ideally, if you pull the fib from here to here, extension of 112, or sometimes 127, but mostly 112, and slightly above wave 3, and then it will come down below wave A anyway, wave C, for wave C, wave 5. This could also be like 535, most commonly 335, right? So subwaves A, B, C, wave 3 waves, then A, B, C, small a, B, C makes up the wave B, but this wave B goes above, a little bit above wave 3. It ends up above wave 3, and then you know that if it is coming down, there is another version that will not come down all the way here. We're going to talk about that in a later video. But this one, if it comes down all the way below wave A, a little bit below, maybe like I said that, maybe around 112. Fib, if you draw the fib from here to here, the extension 112, just between 1 and 127 is an extension level 112, right? It goes like that over there, right? And then it goes up for wave 5. So if that is happening, well, let's say, for example, if wave 3 ends up here and then you have ABC correction, it is going to the upside, you go long here, right? The idea is to go long, not short. No, don't try to short here because the previous move is a powerful wave 3, then it will be coming, going to the upside, going for wave 5, right? Eventually. So you try to go long here after ABC correction around 23% line. It may go all the way to the upside if you get lucky, right? If not, then what will happen? Then you'll make some little bit and then it will start to drop here. So you know exactly what it is, right? If you can try from going long from here or here, but it is dangerous, right? So you wait until it comes very close to A at least, right? And then, like I said, that you can try that because it could be another flat and it go all the way to the upside and you're going to miss the train. So when you try with a very hard SL stop loss, right? Very hard, small. And if it works out fine, if it doesn't, don't worry, because it's going to come down here and then go big, right? So you're going to cover all of that in the big move, right? That's it. Then small losses are just like overhead in running a restaurant, for example, right? When you're running a restaurant and at the end of the day, you have a $3,000 sale. That is not pure profit. That is maybe the profit is like maybe $400. The rest will go back into the restaurant, right? Like rent and then electricity and then payroll and the food costs and all of that. And just like here, you will have small losses here there. Just like my strategy, my Magic IB system or Creative IB system, entry system is like I have 4 conditions and I make entry from a small time frame with with those conditions, right? And a 20-minute chart and a Renko charts. And the worst scenario is that I will lose 25 pips. Worst scenario. But most of the time, what happens is that if I try to go long, the price goes in my favor, maybe 25, 30 pip, and I come and sit on a break even, right? And if it comes back down and hit my SL, I don't lose anything, right? And other thing that I do is that when the price moves up a little bit, if I see a little danger, more danger, right? But I still want to try it, then if the price goes up like 15 pip in my favor, I'll move my SL from 25 to 20. Then if it goes to 20 pip, I'll make it to 10, right? So if it turns on me, then what I lose is 10 pip. And then it goes to like 25 pip, and I move my SL to break even. Slowly, as the price goes in my favor, in my way, I move my SL lesser and lesser risk, right? So that's another way. And then from here, if it goes below this and then hitting 38% and then start to go up, that's where you're going to go in with confidence, right? Same way, you don't have to go over or big lots and all of that. Same thing. So 25 pip SL, but have faith that it will work out, and then it will go all the way to maybe 127 or 161 extension to this from 3 to 4. Right. So this is the only difference between the expanded flat and a regular flat is that the B wave will go above wave 3, then C wave will come in 5 waves around 38%, and then wave 5 will start, going from like wave 1, 2, and 3, 4, 5. See, this will make a lower low, but the next move will be higher low, and then it goes up, just like here. You will have wave 1, 2 here, 3, 4, 5, ending up with 5. 5 subwaves like that. For big black count, wave 5 moved. Okay. And the bearish version of this is just the opposite. You have a big wave 3, then you have A, and then you try to go short, but it comes down here and then go back up again. So, okay, no problem. You don't lose anything. Then again, you go short here and you will be in some profit. All right. So this is what the flat correction, expanded flat correction is all about. Okay. So nothing fancy, nothing major here. It's just a little difference. A regular flat, expanded flat. Now we're going to talk about the running flat later on in this next video. Okay. So I will end up. Oh, let me just give you some example. I forgot to give you examples. Sorry. So like, for example, this one. See, you have this big wave 1, right? And this is, by the way, eur-USD weekly chart, right? So this is you can find this on a smaller time frame and 4-hour chart, daily chart, weekly chart, all of that. But like I said, less than 4 hour is not worth it. It's like wasting your time. But if you find this one and then you find the same thing on a lower time frame as well, then it's fine. But you should have your analysis like weekly, daily, or 4 hours so that you have a little bit of decent amount of pippage coming in, right? Now, if this is like wave 1 and 2, right? Small wave 1 and then small wave 2, let's say, ending up here, just like this diagram showing. You see this is small wave 1 and 2. So this is how it is. We have 5 waves going and ABC correction for wave 2, followed by wave 3, 4, 5. That might be happening here. This wave 1, then you see ABC, right? If you pay attention to this, you see this version is exactly like this version. See this wobble here for wave 1, and we have this wobble here, and then wave 1. Just like this wave 1 is just like this one, right? Except this one, A, and then B went up, and C. And here it's a zigzag correction. We're going to talk about that later videos, right? But here is A, B went above this wave A. This is, by the way, this expanded flat came in a wave 2 instead of wave 4. That happens, right? But rare, but that happens. Usually it's in wave 4, but this is also possible. So wave 1, then A, you see this B goes above wave 1, and then C came down below wave A. So that's a flat correction, followed by wave 1, and then it's a zigzag correction. We will learn about that later. So wave 2, followed by wave 3, 4, 5 to the upside. So this is big wave 1, this is big wave 2, and big wave 3 need to be coming to the upside. That's, that's theory. I'm not saying that it will definitely come, but, when the market opens up, today is Saturday, so when the market opens up and I see that if I get long setup, my Magic IV setup to go long in a volume time and backed up by some kind of news, a euro positive or a USD negative news, then I will go long and take that, right? Technical always goes along with the fundies, right? Always remember that the technicals are like the roadmap. The road, the city, the roads in a city, right? If you don't have the destination, you drive around in the city, where do you end up? Nothing, nowhere, right? So, but you have to have the destination, and then you go out of the house, and then you sit down in the car, and you know that you are going now to Home Depot to buy some tools, right? So you know which route that you should take to go to the Home Depot, which road you're gonna take, which direction you're gonna go, because you know already. But final destination is what? It is already decided before you got into the car that you are going to, or you are in need to go to Home Depot to buy that tool, right? That's what it is. The fundy, the roadmap is there. The city have the roads already out there, but you are not on the road, right? You are inside the house just yet. But then when you decide that you need to go to Home Depot, you get in your car and then get on the road. Similarly here, this is knowing the roads, right? But once fundy give you the direction, fundy give you the destination, fundamental news that gives you this decision to go, where to go, right? Which direction to go, Home Depot or Publix or where you want to go, right? So that's how it is. So keep in mind that both goes together. Never do you trade only with one thing, or either technical or news. No, if you only trade on news, okay, news says that USD good news, right? So USD getting strong, but for how long and how far the pair is gonna go, you also need to know that. But if you know the road map, but you don't even know where to go and why should you go, then you will end up nowhere, right? That's how it is. So keep that in mind. This is the best analogy that I can give you between the roadmap and the destination. The territory, yes, you know the territory, that as soon as, like, there's the pizza delivery guy, right? If you don't have a GPS, then it's screwed up. Other guy has GPS roadmap. They will give you okay, this is the address, deliver the pizza. Okay, so for that address, you start to drive, but with the help of GPS, it's quick and fast. No GPS, you'll end up with maybe a dead end, some roadblocks, right? Or a wrong route, and then, instead of going north, you went to west or east, maybe a long route and taking long time, all of that. But with the help of GPS, you have the roadmap in your hand, you can get there quickly and easy. Exactly the same thing in the trading. All right. So I will finish this video here. You have the clear example. Try to find other examples like that. That will be your practice homework. Okay. So bye for now, and I'll see you in the next video.